Hey, what's up guys? Sam here, and I'll be doing the free video for Friday, February 17th, 2023. So just finished doing the premium video for the good folks in the gold room, and this is one of those weeks going into next week that things are pretty much as clear as mud to me. Structurally speaking, everything's still intact. We'll start here with SPX. And a couple of things. I had been giving you guys an upward target of 4180. This was probably, I don't know, 2-3 months ago, and it comes from measuring the move. So if you run symmetry, it gives you that 4180 target. We did come up here and hit it a couple of times, and at least from a weekly perspective, it has been rejected. 1 candle, 2 candle, and close enough for 3 candles. However, none of the signals have really changed, right? You have basically 2 inside weeks here. If you use this candle as kind of the body or the main candle, you have an inside week, and then you have another inside week inside of that. In terms of the signals, I don't actually have any signals that would reverse this upward thrust that happened over here. And in terms of the structure, meaning the positioning of the moving averages, you still have the 21 crossing through the 50, the 200 underneath, and it's still structured. And if you look at where it closed today, it actually closed just a hair above the daily 21. So from a momentum point of view, I don't have a break. I don't have fresh momentum, but I don't have a break. I don't have a break here. I don't have a break of structure. And on the weekly time frame, the only thing that I have is, so far, 3 rejections roughly of the 4180 level. So typically in these videos, especially in the premium video that we make for the gold room, when we look at different things, we are able to kind of discern, if not just by looking at SPX, but then we could look at something like bonds or the dollar and get a generally good idea of what the market wants to do for the next week. But I can't say that I have that here. What I can say is that the bulls this week did hold all critical levels that were necessary, but they did it just on the razor's edge, right? So the daily close here on SPX is a good example, and then I could show you a couple more examples here. Going into next week, I think the bonds are really what we should be looking at, because I think the bonds will be very important in terms of whether the market can actually find a bid here or whether it'll keep going lower. So if I look at something like ZB, which again normally is able to give us a decent tell of what the market wants to do, structurally speaking, unlike the SPX, which has this nice moving average structure and is holding at the 21, here you actually don't have that, right? You're below the weekly 21, you have a falling 50, you have no buy signals on the weekly, you have active sell signals on the daily, and you're below a negatively crossed 50-21 on the ZB. What did it do, however? Well, it did prevent itself from taking out these lows, right? So when you're able to come down to the lows, right here, and you put in a nice reversal candle, that can be the start of something. Now, does one candle reverse all of the active sell signals that are present here in the bonders? No, not just one candle, but from humble beginnings, great things can happen. Now, what you will need to see next week is you need to see that low hold on the bonds. So what I would suggest is mark this level on the ZB or the ZN, whatever you like, just whatever today's low was. Leave an alert there. And below there, I think the market will actually break short. Above there, however, if they're able to come in on Tuesday, and maybe put in a candle that closes above the high of this candle the previous day, that would then be a pretty bullish development and would likely stabilize everything. Okay, so we already did the work in the gold room, and we looked at all the indices. I think the IWM was probably the one that has the best middle ground between momentum and structure, where it has relatively decent structure and more momentum than something like the Dow or the S&Ps or the NASDAQ. And the level here on IWM is 194, right? So if we look at 194 as resistance, and we look at the daily 21 as support, you can see there that it's a very, very tight range here. So what I'm going to be watching next week is going to be the bonds and some critical levels in the market, 194 IWM, and then on SPX 4083, because it's a major fire line, as well as 4100. So going into next week, the game plan is if the bonds, ZB, catches a bid, and the SPX is able to get above 4083, especially 4100, then party likely continues. In the event that the SPX fails from 4083 or even 4100, and you start to see a little bit more selling in the bonds, then I actually think the market wants to go lower. For now, as we go into next week, structurally speaking, everything did hold, but it did so in a very unimpressive way. So I guess it cuts both ways. It wasn't impressive because it's, this is the razor's edge and everything closed here. So you'd like to see a little bit more moxie than that. However, it could have been a lot worse for the bulls, and they could have closed below the razor's edge. So in a way, it's unimpressive because it closed right at the razor's edge. In a secondary way, it's actually somewhat impressive because they actually managed to go below and then come back and close it relatively high. So that's what we got for you guys. It's as clear as mud out there, but I do think that we have a good game plan for what we want to see next week. And honestly, as long as the market continues to be right on the razor's edge, I think we benefit the most by starting each day relatively flat and just day trading until we get better signals. Up or down, it doesn't really matter, but we know the signals that we're looking for. Until we get better signals, I think maybe day trading might be the way forward. And then if we get any break in any significant direction, I think there will be a nice continuation after that. All right, guys. Well, that's my time. Thanks as always for joining us on this Friday. Thanks for stopping by. Make sure you leave us a like, leave us a subscribe if you're not already subscribed, and we'll catch you next Friday. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.